Ladies and gentlemen, thank you for standing by and welcome to Insurance Megatrends of the Next Decade and Lessons Learned from the 2000s. At this time, all lines are in a listen-only mode. Later, there will be a question and answer session. If you wish to ask a question at that time, you'll need to press the star, then 1 on your touch-tone phone. If you need assistance during the call today, please press the star followed by the 0, and an operator will help you offline. As a reminder, today's call is being recorded. At this time, then, I'd like to turn the conference over to Jean Salvatore. Please go ahead.
Thank you. I would like to welcome everyone to today's webinar, co-presented by the Insurance Information Institute and Fireman's Fund, a company of Allianz. My name is Jean Salvatore, and I am the Senior Vice President of Public Affairs for the Insurance Information Institute. Today's topic is Megatrends for the Decade Ahead. Today's presenters are Dr. Hartwig, President and Economist for the Insurance Information Institute, and Jay Ralph, Allianz SE Board Member for Insurance in the NAFTA markets. This presentation will take about 35 minutes. We will open the phone lines for questions and answers immediately following the presentation. Until then, everyone's phone line has been muted to cut down on background noise. Dr. Hartwig and Mr. Ralph are going to examine 4 distinct issues, with Dr. Hartwig going first, providing an industry perspective. Mr. Ralph will then offer a look at how Allianz Fireman's Fund views these issues. Our first topic will be catastrophic loss. Dr. Hartwig?
Well, thank you very much, Jean, and it's very much my pleasure to participate in this webinar today. And thank you for so many for joining. And depending on where you are, it's either good evening, good afternoon, or good morning, as we're stretched across Europe and the eastern United States and western United States and everywhere in between. So thank you. This first topic, as Jean mentioned, is certainly one of the megatrends of not only the past decade, of the future decade, but of several recent decades, and that is the issue of catastrophic loss and rapidly rising catastrophic loss. And Suzanne, if you could go to the next slide, please. What we see is clearly a trend in the United States. Even before adjusting for inflation, you see very, very substantial increases in insured catastrophic losses over the past 2 decades. The 2009 was a relatively quiet year. You may have heard about $11 billion in insured catastrophic losses in the U.S. alone. It was lower on a global scale as well. But the reality is that the 2000s can be characterized as nothing other than a decade of disaster, with a doubling of insured catastrophe losses relative to the 1990s. And if you move to the next slide, please, what you will see is that this trend is mirrored mirrored on a global scale, not only in terms of insured losses, which you see in blue, but in terms of total economic losses. In other words, those losses which are uninsured. And we see this on a global scale. And in fact, over the past 3 decades, we've been roughly on a track for a doubling each one of these decades. So certainly a mega trend for the decade ahead is concern over global natural catastrophes. These loss trends are very, very ominous indeed, and they portend an even more disastrous decade in the future, not only in the United States, but on a global scale. There is absolutely nothing that suggests that catastrophe losses in the 2010s will be lower than they were in prior decades, and in fact, everything suggests they will be higher, and in fact, potentially much higher. I should remind you that these are just natural catastrophe loss trends. These do not even include such issues as terrorism, which could be very costly indeed. Next slide, please. What we see is some wonderful data here from Munich Re, and what we see is that historically, or at least in 2009, and this is the case historically, the preponderance of loss has occurred in the major insurance markets of the world, such as the United States and in Western Europe. We've obviously had the tragedy in Haiti, for instance, recently, which a 7.0 magnitude earthquake, but the insurance losses there will be very, very small because there's very little in the way of private insurance in that particular market. A mega trend, however, that is emerging is that as parts of the world that are accounting for a greater and greater share of global economic activity continue to expand, particularly China and other parts of South and Southeast Asia, they will account for a greater share of the insurance loss dollars from global catastrophes. I should say that they already account for the majority of the deaths, tragically, associated with catastrophic loss. And so what you see in this chart, this next chart, is that we have a large number. Western Europe and the United States by no means have a monopoly on natural catastrophes. It's simply that there's a higher degree of insurance that is in play in these markets. Next slide, please. Back in the United States, what we can see is that we've had an enormous expansion of all types of catastrophic loss. Here I focus only on coastal exposure, hurricanes being the largest cause of loss over the past decade in the United States. It may seem quite remarkable, but despite the fact that there's been tremendous destruction in many coastal areas, there still remains $2.5 trillion of insured coastal exposure in a place like Florida, and you could see very large amounts elsewhere. The next slide, if you would, shows that a mega trend for the next decade, and one that began really in the mid-90s and began to really take root in the 2000s, was the use of securitization, tapping the capital markets to finance catastrophic loss. Here we saw a significant increase during the past decade, at least through 2007, in the use of catastrophe bonds, about $7 billion worth of issuance. That was set back during the credit crisis, but once again is increasing, and we would expect that to increase in 2010 as well. So a mega trend here is that capital markets will play a larger role in financing catastrophic loss. In the next slide, a very important mega trend is that there will be increased government pressure, increased pressure on governments to provide subsidized insurance in catastrophe-prone areas. This became a major issue in the past decade. It will grow in importance in the decade ahead as population growth continues to be fastest as some of the most catastrophe-prone areas, not just in the United States, but around the world. So governments will be called on to do more and more here, as will private insurers, but in many cases, governments will be called upon to provide subsidized insurance coverage in many of these areas. So to discuss this issue of catastrophic loss now, I'd like to turn it over to Jay.
Thank you, Bob. I've been asked to give an Allianz Fireman's Fund perspective and how we're responding to some of the things that Bob has addressed. And I guess the headline is that insurers face both insured loss and insured cats as well as capital market cats. And I would just echo what Bob said, that cat losses in 2000 shattered all records. And our view is that the next decade is unlikely to be different. And so the question is, how did and how will the insurance industry deal with this increase in loss? What I'd first like to do is speak a bit about NatCat. And at Allianz, we believe that management of cats will require us to have more sophisticated and more segmented approaches to risk and how we manage that risk. And to give you an example, we've been fortunate at Allianz to have formed almost a quarter decade ago, 25 years ago, quarter century ago, Allianz Re. And the focus of Allianz Re was to pool the cat risks and the reinsurance risk, and then to seed those out to the market. And this global pooling has been one of the methods that we've managed our group cat exposure. A second way we've done that is through risk swaps, where we have traded risk, for example, between U.S. risk and Japanese risk. And this helps us to manage our peak exposures. I believe last year Allianz was the largest retrocessionaire of risk, cat risk, into the reinsurance market. So for us, having adequate capacity and good capacity is critical. Another way that we're managing our cat exposures is through cat securitizations. And for us, that offers us not only the advantage of tapping into additional capacity, but also the ability to term out some of our risk. In other words, if you were financing a business, you wouldn't finance all of it using short-term debt, and our view is we shouldn't finance our cat risk using only single-year reinsurance. But of course, we do use and are a substantial buyer of reinsurance, and that's important for us.